All right, welcome to the deep dive. We're diving into KPI Green Energy today,
Sounds good.
looking at their recent earnings call transcript.
Yeah.
And you're interested in their business model and industry outlook,
Right.
their growth potential, and the risks.
That's it.
So that's what we're going to focus on.
Great.
KPI Green Energy is an Indian company.
Okay.
They're focused on solar and wind energy.
All right.
It seems like they're aiming for some pretty huge EE growth,
Oh.
targeting 10 gigawatts capacity by 2030,
Wow.
which is a lot.
Yeah, that's impressive.
Yeah, and they're already net debt zero.
That's great.
So that's impressive.
Yeah.
And they're expanding beyond their home state.
Interesting.
There's definitely a lot to unpack here, so let's
Yeah.
dive in.
Yeah, it's really fascinating to see how KPI Green Energy has structured their business
Okay.
to capitalize on this renewable energy boom in India.
Yeah.
They've adopted this two-pronged approach.
Okay, so let's break down this two-pronged approach. So they have what's called an independent power production model, or IPP.
Right. In the IPP model, they basically act as energy landlords.
Okay.
They build and own the power plants.
Okay.
And then they sell the electricity generated to customers.
How-
You can almost think of it like owning a rental property and
Well, hey.
collecting rent.
Yeah.
But instead of tenants, it's energy consumers.
So that's one side of the business. What about the other prong?
Their second approach is called captive power production, or CPP.
Okay.
This is more like a construction and maintenance business.
Okay.
So they're building and maintaining plants for clients,
Got it.
typically securing long-term contracts for these services.
So they're both generating their own energy to sell and helping other companies generate theirs.
Exactly.
That's really interesting.
Yeah.
Their recent earnings call revealed a pretty big difference in revenue between the two models.
Right.
It looks like in the first half of fiscal year 2025,
Okay.
only about 13 to 14% of their revenue came from IPP.
Wow.
And like 86 to 87% came from CPP. Yeah. So it seems like their bread and butter really is in the construction and maintenance side of things right now.
That's true, but it's important to remember that this is just a snapshot in time.
Okay.
KPI Green is currently in the process of completing some massive IPP projects
Oh, yeah.
that are going to dramatically shift that balance in the coming years.
Could you give us an example of one of those projects?
Absolutely. They recently won a huge EE 1 gigawatt IPP project from GUVNL,
Oh,
which is a major government utility in India.
okay.
This single project is expected to significantly boost their ITP revenue stream.
That's huge.
And this win is a strong signal
Okay.
that KPI Green is serious about becoming a major player in the independent power production space.
So that's a huge win. But it sounds like they're not neglecting their CPP business either.
Right.
I see they have projects going with big names like the Aditya Birla Group and Ayana Power,
Okay.
and even projects with Mahagenco, a Maharashtra government entity.
Right.
So it seems like they're really covering all their bases.
They are.
But is this dual approach sustainable in the long term?
That's a good question.
Are there any potential drawbacks to juggling these two different models?
Well, it's certainly a complex strategy.
Yeah.
And there are always potential drawbacks to any business model.
Yeah.
However, by maintaining a strong presence in both IPP and CPP,
Okay.
KPI Green is diversifying its revenue streams
Yeah,
and mitigating risk.
that makes sense.
That being said, successfully executing such a strategy requires careful planning and resource allocation.
So you mentioned that KPI Green is subcontracting a large chunk of that 1 gigawatt IPP project
Yeah,
to KP Energy.
right.
What's the rationale behind that decision?
Well, KP Energy is a sister company with a lot of expertise in wind energy.
Okay.
So this move allows KPI Green to leverage this specialized expertise,
Okay.
but it also raises questions about transparency and potential conflicts of interest.
That's an interesting point.
Yeah, it will be interesting to see how they address these concerns from a corporate governance perspective.
So we're seeing that this impressive growth isn't without its complexities.
All right.
But before we get into those, let's talk about the industry outlook as a whole.
Sure.
I know you've got a lot of insight into the renewable energy market in India.
Yeah.
What's the overall picture looking like right now?
The Indian renewable energy market is absolutely booming.
Okay.
There's strong government support,
Okay.
ambitious green energy targets,
Yeah.
and increasing demand from corporations and utilities.
Right.
So it's a very favorable environment for companies like KPI Green.
And it sounds like KPI Green is aiming to be more than just a participant in this boom.
Yeah.
Their goal of reaching a 10 gigawatt capacity by 2030 is incredibly ambitious.
It is.
What does that kind of growth entail?
Right.
What concrete steps are they taking to make that vision a reality?
Well, they're definitely not just sitting back and riding the wave.
Okay.
To achieve that goal, they're pursuing geographical diversification.
Yeah.
They're looking beyond their home state of Gujarat
Got it.
and expanding into Maharashtra.
Right. Andhra Pradesh, Rajasthan.
Yeah.
And they're even exploring potential opportunities in international markets.
Wow, so they're thinking big.
Yeah.
Not limiting themselves geographically.
Exactly.
Their current order book is sitting at a hefty 2.41 gigawatts of projects.
It is.
Which really speaks to their growth trajectory.
It does.
Can you break that down for our listener?
Of course.
In terms of IPP and CPP.
Yeah.
What's the estimated value of these projects?
Okay.
And what kind of timeline are we looking at?
So out of that 2.41 gigawatts, 1.26 gigawatts are for IPP projects,
Okay.
which are estimated to be worth somewhere between 2,200 euro and 2,300 crores.
Okay.
And just to put that in perspective for our listeners,
Yeah.
1 crore is equal to 10 million.
Okay.
So we're talking about a significant amount of money here.
Yeah, for sure.
The remaining 1.148 gigawatts are dedicated to CPP projects.
Okay.
The CPP projects are expected to be finished by September 2025,
Okay.
while the IPP projects will likely be completed by mid-fiscal year 2027. So they've got a full plate.
Yeah.
And it looks like they're thinking long-term,
Right.
with these projects stretching out to 2027.
Exactly.
What other strategies are they employing to ensure future growth?
Well, one of the key things they're focusing on is securing land and evacuation rights,
Okay.
which are absolutely crucial for any renewable energy project.
Right.
So it looks like they're not just securing projects, they're strategically acquiring the resources they need for continued growth.
So it sounds like they're being very proactive.
Yeah, very much so.
How much land are we talking about?
Okay.
And what does that translate to in terms of value for the company?
They're already sitting on over 3,000 acres of land,
Wow.
and they have plans to acquire another 2,000 acres.
That's a lot of land.
This land bank is estimated to be worth around 1,000 crores.
Wow. So they're not just building power plants, they're building a foundation
Yeah.
for long-term success in the renewable energy sector.
Ex-
But we'd be remiss if we didn't talk about the potential challenges they face
Of course.
with such ambitious growth plans, right?
Yeah, every business, especially one in a dynamic industry like renewable energy,
Sure.
faces inherent risks.
All right.
And for KPI Green, these risks become even more pronounced when you consider their ambitious growth targets.
So what are some of the biggest roadblocks they might encounter?
Well, one of the first challenges that comes to mind is competition.
Okay.
The renewable energy sector is attracting a lot of players,
Yeah.
including giants like Adani Green,
Right.
who have significant resources and experience.
Yeah.
So how KPI Green plans to differentiate itself and maintain its edge
Yeah.
in this increasingly competitive landscape is a key question.
That's a valid concern. During the earnings call, their CEO emphasized their strong execution capabilities
Yeah.
and their decade-long experience in both wind and solar.
Okay.
Do you think that's enough to give them a competitive advantage in this crowded market?
Experience and a proven track record are definitely valuable assets,
Yeah.
especially in a sector that demands successful project execution.
Okay.
However, they might need to go beyond just relying on their past performance.
Sure.
They need to think about how they can innovate,
Okay.
offer unique value propositions,
Yeah.
and build strong relationships with key stakeholders.
So they need to continuously adapt and evolve
Exactly.
to stay ahead of the curve.
Right.
Besides competition, what other hurdles do they need to be prepared for?
Financing this kind of massive expansion is a major challenge.
Yeah, makes sense.
They're currently operating with zero net debt,
Yeah.
which is fantastic.
Yeah.
But maintaining a healthy capital structure while funding such significant growth
Okay.
will require strategic leveraging of both debt and equity.
Right.
So how they balance those funding sources will be critical to their long-term success.
That makes sense. You can't just keep raising money without considering the implications for your financial health. It's a balancing act, and it seems like they're aware of that need for financial prudence.
Yeah.
Their CFO stated that their goal is to keep their debt-to-equity ratio at a maximum of 2.1.
Okay.
Could you explain what that ratio means for our listener
Sure.
who might not be familiar with financial jargon?
So the debt-to-equity ratio essentially measures a company's financial leverage.
Okay.
It tells you how much debt a company is using to finance its assets
Okay.
relative to the amount of equity it has.
Got it.
A higher ratio generally indicates higher financial risk,
Okay.
as the company has more debt obligations.
Right.
By aiming to keep their debt-to-equity ratio at 2.1 or lower,
Okay.
KPI Green is signaling that they are committed to maintaining a healthy balance between debt and equity,
Right.
which reduces their risk profile.
So it sounds like they're trying to strike a balance between aggressive growth and responsible financial management.
Yeah, they are.
But as with any ambitious project, there are always inherent execution risks. What are some of the things that could go wrong in the actual implementation of these projects?
You're absolutely right.
Yeah.
Even with the best planning, there are always unforeseen challenges that can arise.
Sure.
Especially as they venture into new geographical territories.
Right.
Managing these large-scale projects across different states,
Yeah.
each with its own regulatory nuances and logistical complexities, can be a real headache.
Yeah.
They'll need to have strong project management capabilities
Okay.
and a deep understanding of the local context to mitigate these execution risks.
It's like they're trying to conduct an orchestra with musicians spread across different cities.
Yeah, good analogy.
Coordination and adaptability will be key.
Absolutely.
And we can't forget about the ever-changing regulatory landscape in India.
Right.
How could shifts in government policies and regulations impact KPI Green's plans?
Regulatory uncertainty is always a risk in the renewable energy sector.
Okay.
Governments can change policies related to incentives, tariffs, land acquisition, and environmental regulations, all of which can significantly impact project economics and feasibility.
Right.
So KPI Green needs to be closely monitoring the policy landscape and be prepared to adapt their strategies accordingly.
Got it.
They also need to proactively engage with policymakers and regulators to ensure that their interests are represented.
So it sounds like they need to be nimble and responsive to navigate this evolving regulatory environment.
Exactly.
Another risk factor we need to consider is the declining prices in the IPP market.
You're right. The price per unit of energy in IPP projects has been trending downwards.
Okay.
Which is great for consumers, but it can squeeze the profits of companies like KPI Green.
So lower solar panel costs are good in the sense that they could potentially secure projects.
Yeah.
With even lower bids and still maintain decent margins.
Right.
But if the selling price of electricity keeps dropping, that eats into their profitability.
Exactly. It's a race to the bottom, in a sense. KPI Green will need to be strategic in how they manage this dynamic.
Okay.
They'll need to carefully analyze each project's economics and ensure they can remain profitable even in a declining price environment.
Makes sense.
They also need to consider diversifying their revenue streams, potentially by expanding into new areas, like energy storage or electric vehicle charging infrastructure.
So it sounds like there are a lot of moving parts.
There are.
And KPI Green will need to be adaptable and strategic to navigate this complex landscape.
Yeah.
They've got a lot of ground to cover, so let's pick this back up in part 2.
Sounds good. It certainly is a complex and dynamic landscape.
Yeah.
As we were discussing before, KPI Green Energy is at a pivotal point in its journey.
Right.
They've got a lot of things working in their favor, like a strong market and supportive government policies, but they also face these significant challenges.
Right. It's almost like they're walking a tightrope between aggressive growth and careful risk management.
Yeah, it's a delicate balance.
What stands out to you as their biggest opportunity in all of this?
Well, if we connect this back to the bigger picture of India's renewable energy goals, I'd say their biggest opportunity lies in capitalizing on the government's push for green energy. India has set some ambitious targets for renewable energy adoption, and KPI Green, with their experience, expertise, and growing scale, is well positioned to be a key player in helping the country achieve those targets.
So riding that wave of government support could really propel their growth.
It could.
But they'll need to carefully manage their resources to make the most of this opportunity.
Absolutely. And a key aspect of that resource management is their financial strategy.
Okay.
They'll need to secure funding for these ambitious projects while maintaining a healthy balance sheet.
Yeah.
That's where their decision to focus on both IPP and CPP becomes even more strategic.
Can you explain how the two models play into their financial strategy?
Sure. The IPP model, as we discussed, is capital intensive upfront. You're building and owning these large power plants, which requires a significant amount of investment.
Yeah.
But the payoff comes later with long-term revenue streams from selling the electricity generated.
Got it.
It's a higher risk, higher reward model.
So that's where the CPP model comes in.
Exactly.
Providing a more stable stream of revenue through those construction and maintenance contracts.
Yeah.
It acts as a sort of counterbalance to the higher risk IPP investments.
Exactly. It's like having a diversified investment portfolio.
Okay.
The CPP business provides a stable base, allowing them to pursue those potentially more lucrative but riskier IPP projects.
It's a clever way to balance growth and stability.
It is.
But even with a solid financial strategy, the actual execution of these large-scale projects across different states seems like a huge logistical challenge.
It can be.
How can they make sure things run smoothly and stay on track?
Well, that's where their proactive approach to securing land and evacuation rights becomes so important.
Okay.
These are the essential building blocks for any renewable energy project.
Right.
And having a strong land bank gives them a significant advantage.
Okay.
It allows them to move quickly on new projects and reduces their dependence on external factors.
So it's not just about winning contracts.
Right.
It's about having all your ducks in a row.
Exactly.
Before you even start.
Yeah.
They need to be prepared and have the resources lined up to avoid delays and cost overruns.
Precisely. It's all about efficient and effective project management.
Okay.
And that's an area where their experience and expertise really come into play.
Yeah.
They've been doing this for a while, and they have a proven track record of successfully executing complex projects.
But going back to the competition for a moment.
Sure.
Do you think their experience alone will be enough to keep them ahead of the pack?
That's a good question.
Especially with major players like Adani Green entering the market.
Right.
What can KPI Green do to stand out and maintain their competitive edge?
While their experience is a strong foundation,
they
can't just rest on their laurels to truly thrive in this competitive landscape. They need to be innovative.
Okay.
Maybe that means exploring new technologies, finding ways to optimize their processes, or developing unique value propositions that set them apart from their competitors.
So they need to be constantly learning, adapting, and finding ways to add value.
Exactly.
It can't be a set it and forget it approach.
I can't.
We've talked about the competitive landscape and the challenges of managing growth.
Right.
Let's zoom in on another potential risk factor.
Okay.
Those declining IPP prices.
Yeah.
What strategies can KPI Green employ to remain profitable even as the price per unit of energy continues to decrease?
Their CFO mentioned they'll be looking for opportunities to further capitalize on decreasing panel prices to boost project IRRs.
Okay, and for our listener, IRR stands for internal rate of return, which is basically a way to measure the profitability of an investment.
Exactly.
A higher IRR means a more profitable project.
Right.
So it sounds like they're aiming to leverage those cost savings to their advantage.
Yeah, they are.
But it's a balancing act.
Right.
They can't just keep undercutting the competition without potentially jeopardizing their own financial stability.
Absolutely. They need to find that sweet spot where they can offer competitive bids while still ensuring sustainable profitability.
Makes sense.
It requires a deep understanding of their costs, careful financial modeling, and a willingness to walk away from projects that don't meet their profitability criteria.
It's like playing a game of chess.
Yeah.
Thinking several moves ahead.
Right.
And anticipating the consequences of each decision.
Oh, exactly.
They're dealing with a lot of complexities. We've covered their business model, their growth strategies, and some of the key risks they face.
Right.
What are your final thoughts on KPI Green Energy's position in the renewable energy market?
KPI Green Energy is a fascinating case study in navigating the complexities of renewable energy development in a rapidly growing market.
Right.
They've demonstrated ambition, strategic thinking, and a willingness to take calculated risks.
Makes sense.
But they also face significant challenges.
Right.
And their success will depend on their ability to adapt, innovate, and execute their plans effectively.
Their journey is far from over.
It isn't.
And it will be interesting to see how they navigate these choppy waters.
It will be.
We'll be back in part 3 to wrap up our deep dive.
Sounds good.
Welcome back to the deep dive. We've been talking about KPI Green Energy, and it's clear they're on this ambitious path.
Right.
They're making big moves in a market that's full of potential, but also a lot of challenges.
It is a dynamic market.
It feels like they're at a crossroads.
Yeah, that's a great way to put it.
You know, they've got these huge ambitions for growth, and they're putting the pieces in place to achieve them.
Yeah, they seem to be.
But they're facing some headwinds.
Right.
Like we talked about the declining IPP prices.
Yeah.
Lower solar panel costs can be a double-edged sword.
That's true. On the one hand, lower input costs mean KCI can potentially offer more competitive bids and still maintain healthy margins.
But on the other hand, if the selling price of electricity keeps dropping,
Yeah.
that squeezes their profitability.
Right. It's a tough balancing act.
It is. They need to be aggressive in securing projects, but also make sure each one is financially sound.
Yeah.
Even if that means letting some opportunities pass.
Exactly. Walking away from a deal can be just as important as securing one.
As a potential investor, you'd want them to be prudent, wouldn't you?
Oh, absolutely.
So how do you see them navigating this challenge of declining prices while staying profitable?
Well, their CFO mentioned looking for ways to leverage those decreasing panel prices to their advantage.
Okay.
They're aiming to boost project IRRs.
Right.
Meaning they're focused on maintaining profitability even as the market shifts.
Makes sense. But we also discussed the importance of a balanced portfolio.
Right.
They can't just focus on chasing the lowest prices.
Exactly. They need to diversify their revenue streams.
No way.
And maybe explore new areas like energy storage or electric vehicle charging infrastructure to create those additional avenues for growth and stability.
It seems like KPI Green's future success will depend on their ability to adapt and innovate.
I agree.
And make smart decisions in this constantly changing market.
Yeah, they've laid a solid foundation.
Okay.
But the next chapter of their story is still being written.
Right.
And that's what makes this deep dive so compelling.
Yeah.
It's a story of ambition, risk, and the pursuit of a cleaner energy future.
And it's a story that has implications not just for KPI Green, but for the broader renewable energy landscape in India and beyond.
Absolutely. Their choices, their successes, their stumbles, they all contribute to this larger narrative of the global transition to cleaner energy sources.
All right, listeners, that concludes our deep dive into KPI Green Energy.
It's been a good one.
We've covered their business model, their growth plans, and the key risks they face.
Yeah, a lot of good info.
But this is just the beginning of your own exploration.
Right.
What stood out to you?
Yeah.
What other questions do you have?
What would you do?
Keep diving deeper, keep learning, and stay curious.
Exactly.
We'll be back with more deep dives on other companies and topics that matter to you.
We'll see you next time.
Thanks for listening.